By the way, Ray, that was awesome. Thanks for sharing that. That was cool to just watch your
it was
breakdown.
really interesting.
That. I always
I
always love hearing from day traders because it's something it's always been something cool to me, but I just love the slower time frames. It's just a lot easier for me to follow along and keep my level-headed self going.
How far back do you, since you're trading intraday, how far back on the charts do you look? How recent is your yeah. Well, no, okay.
You mean in my actual
backtesting? Because obviously in backtesting you can go backtest hundreds and hundreds of days.
Far, yeah.
I guess when you, let's say today is Wednesday, when you're analyzing the chart, would you go back only to Monday? Like how far back on the time?
So as far as the levels that I pay attention to, I would say no further than a week of price action. But I'm really just focused on the previous days, maybe previous 2 days reactions, because once again, we have a very tight window of time that always gets reacted off of, time and time again. So that's mainly what I pay attention to. No more than 5 days for sure.
Right. Now, what happens? I mean, you sound like you're very much a technical trader, but do you, like Nick, look at any fundamentals? And also, if you don't look at fundamentals, what happens on news days? What happens when we blow through all the levels because news just completely obliterates the technical picture? What do you do then?
So that was a question for me, right?
Yeah, it was a question for you. Yeah.
Okay, cool. Yeah. So as far as fundamentals, I truly believe that fundamentals align with technicals. So besides like NFP and FOMC, those are just crazy. It can do whatever. But a lot of the times, the red folder news events that come out actually flow with the transitions at specific levels. I actually been doing a live trading room on my technicalguys.com website and all that, and we actually caught several trades where we were in it right before news came out with a very tight stop, no more than 10 pips. And when news came out, literally, maybe a retracement of a 1 to 2 pips, and then it just takes off in the direction that we were expecting. Of course, not always, but I think it all flows together.
Wouldn't that suggest that people were pre-positioning into the news, and and then you caught the pre-position?
Yeah, exactly. So I think that's why I really love trading that 5 to 7 a.m. window, is because the news usually comes out around 5:30 or 8:30 Eastern time. So if I'm already in a
real
position,
time, 8:30 real time. Okay.
Yeah. So if it's 8:30, I'm actually capturing the momentum push that's going to happen. And once again, I'm trading the lower time frame, quick 1 to 3 risk to reward, taking partials or profits, moving to break even, and seeing what happens.
So let's talk technique, actually, because I'm curious how you guys both handle technique. You have an initial, let's say, 1 to 3. I don't know, 10. Let's just for argument's sake, because 10 pip stop, 30 pip target, right? But that's fantasy. That's that's ideal. In real markets, we all know you have to really scramble to control your P&L. What's your methodology? Run me through run me through a real trade or a hypothetical trade. How would you run a trade in that particular structure? Maybe I don't know. Maybe you did a trade yesterday or today. Maybe you could just walk us through the anatomy of a trade.
Okay, cool. So I'll actually go to Euro USD here. Let's go to. I'm sorry, I got to turn my colors back on.
Yeah, okay, no problem.
But we actually caught this sell trade right here.
Yeah.
But I actually caught this sell trade down to that London's low that I was telling you about earlier. So
this is 1 hour. This is 1 hour time frame. Okay.
Yes. 1 hour.
And you came in when? And you came in when?
So 5 a.m. is when, or I'm sorry, 8 a.m. is when I'm truthfully looking at the markets. So if you look at my time, 5 a.m. is going to be your 8 a.m. All right. So basically what I was looking for in structure is first a break. So we can see we had a uptrend on the lower time frame. And then here we actually broke structure and transitioned into that downtrend. Now, once we did that, I was looking for a retest to this level here. Unfortunately, we didn't get it. But what we did do is create a new impulse leg from this high to this low. So once we did that, I was actually highlighting this bearish engulfing or bearish order block, whatever you want to call it, and looking for a retracement to that. So basically, it was understanding that, number one, we're sitting at a high, because if we look at where price is now, this spike happened in London session and a strong rejection happened. So if we zoom in here, and let's just say we just called all of this supply, and we understand that us as retail traders cannot cause a wick like this to happen. We just simply don't have that power. It has to be an institution or something stepping in. So with that being said, I don't expect price to take out that price point. So when price comes back to my level, what I was looking for is a transition. And oops, I'm sorry. But what we get here is actually price taking out the low of the previous bullish candle. So once we take out that low of that bullish candle, that's letting me know that the sellers are truly starting to step in. Once we get that,
So
we see price push.
We have that. Yeah, sorry to interrupt you. Just want to we'll go through the steps. We have that wick that tests that supply overhang, and then we have,
Correct, yeah.
and this is a 5-minute candle that I'm looking at.
Yes.
Okay, and then we have that that supply to the downside, right? Okay.
Yeah. So then we get a closure under this previous candle's low. Now, basically, if you pass a previous candle's low, you're breaking some kind of structure. You're breaking either supply or demand on a lower time frame. So what we're looking for now is a retest. And that's what this wick on this candle gives us here. So if we drop down now to a lower time frame, such as the 1 minute, this retracement right here is that 5-minute wick to the top side.
Yeah.
So now what we can see is we get a clean bearish engulfing. That bearish engulfing is now my entry point.
Okay.
So I would be going short here. Stop loss, I believe I had it, I want to say around this level here. So roughly around 5 to 6 pips on that one. And then I'm targeting a 1 to 3 here.
Okay.
And I always look to the left as well. Like I want to make sure my target is actually correlating with the level I do feel has a good chance of getting hit. So looking at this and seeing that it created a huge imbalance in price, a huge spike in price, I understood that when price comes back to it, there's a good chance that it's going to want to take this point out. So as far as managing my position, it's based off of a couple things. It's based off of liquidity, which I understand like most people consider liquidity on higher time frames, but the way I see it is every low or high that's created in the market has some form of liquidity that caused that reversal. So this level would be liquidity for me. So the first thing that I want to see price take out is this low. Once we run that low, I'm now looking to my left for other potential areas that have liquidity lying under them. So as we can see, we took out this level and then we started a retracement. Once we start that retracement, my mind goes directly to understanding the order blocks and structure on the chart. So we can see that our last structural high was right here down to this low. So as long as price is maintaining this structure, I understand that my trade is still, overall, viable to go in my direction.
So you haven't taken any partials. You're literally staying in the trade at this point, or you have?
I do believe we took partials here, but usually.
And how much of a partial is? You take a third?
Yeah, I do 33%.
Okay.
Yeah.
Got it.
So if I think, for example, the market is potentially forming a strong reversal, like here we got a bullish engulfing, I may say, I'm taking partials here. And then from there, I may also cut my stop in half, because now I understand that we did form a nice bearish order block, retest, and a continuation downwards. Price honestly should not be breaking this if it wants to maintain the bearish bias. So once we do that, this is where time frame correlation comes in for me, because now that we got this impulse leg that broke past, this bullish candle here, that's going to form a bearish engulfing on a higher time frame. So now, this is another little trick I have in my bag. It's something called MTF candles, but this basically highlights different time frame candles in the background. And what I'll do is basically just do a quick look. It doesn't stay on my chart, but I'll do a quick look for, what kind of candlesticks on higher time frames are forming as price is moving. So we can see here, we get a bearish, bullish, bearish pattern. And once again, the wick high of that 5-minute candle is here. So I feel more confident in seeing price retrace, understanding that this is simply the ebb and flow of the market. And this was actually when that news event came out that I was speaking of, and it literally impulsed us to take profit in literally 3 minutes.
Right. Great. Sounds good. Wow. Nice. Thank you so much.